Hello, this is Chris McCauley. It's a sunny July morning, and I'm here with the first half of 2023 market update. Let's go through some numbers real quick. The Standard & Poor's 500 index was up 17%. International developed markets, as measured by the MSCI EAFE index, was up 12%. And emerging markets were also up. They were up 5% in the first half of 2023. And finally, the Barclays Aggregate Bond Index was up 2% for the first 6 months of this year. A big headline in the second quarter was the debt ceiling standoff in Washington. After nonstop media coverage, it was settled with little impact on the markets. The Standard & Poor's 500 index has become heavily weighted towards a handful of large tech growth companies. Those would include Apple, Amazon, Meta, Microsoft, and Nvidia. These stocks are the primary reason the S&P 500 was up so much in the first half of this year. Large value stocks, which tend to be more dividend-oriented, were up a mere 5% for the first half of the year, compared to a large growth stock increase of 29%. These returns are almost the opposite of 2022, when value outperformed growth by a wide margin, highlighting a big reason to set an investment strategy and to stick with it. A big concern with all U.S. consumers has been inflation. On the inflation front, May 2023 year-over-year inflation came in at 4%. Contrast that with prior year number closer to 9%. The Fed is making progress in the battle on inflation. The primary tool is higher interest rates, as you can see from this chart. This very steep increase in rates in 2022 has slowed down and may end in the mid 5% later this year. With Fed interest rate cycle nearing an end, or at least slowing down, we are optimistic on returns on high-quality bonds in our client portfolios. Unlike 2022, we expect them to provide a strong foundation for returns for our clients. On the diversification front, we do invest in international equities, which have trailed the U.S. for the last 14 years. Recently, international outperformed U.S., as you can see from this chart. By several measures, international stocks may be a better buy than the U.S. these days. A decline in the value of the dollar against other currencies can also help international stock returns. We don't plan to load up on international investments, but we also want to continue our exposure to this asset class. This is the last time you'll see me using this shirt with the SPG logo. We are updating that logo as well as our website in the third quarter of this year. It's part of our transition to Commonwealth Financial Network. Our website is www.spgfinancial.com, and we hope to roll out the new version in the next couple of months. We will let you know when it's available. And that's a wrap for our first half 2023 market update. We look forward to seeing all of you soon.